welcome to London.
Thank you, Matthew Gordon. Good to see you.
Yeah, well, we're here. I kind of feel I'm going to bring my computer here. It's going to look at more like Bloomberg session. This one,
exactly.
You ready?
Around the table.
And from what I've seen on Bloomberg, we're meant to be shouting at each other about what stocks to buy.
Sportscasters and businesses. Yeah, exactly.
Right, we're going to start with some good news. Yes. Okay, the fact that in betting terms, you knocked it out of the park.
Yes.
So where's the nickel price
today? Yes. We hit $20,000.
What did you say I was going to hit?
I was going to say it hit $20,000 a ton by year end, and we got here 7 months early.
To be fair, it's got to stay here for a bit, right? So we needed to stay there, but it's quite good if you think like how Toronto February is a 15.
Yeah,
it's insane.
Yeah, 15.5, and again, I said post Chinese New Year, you're going to see this restocking rally kick in, and that's exactly what happened. And again, shame on the BHPs of the world who said, oh, the nickel market's not going to balance until 2030, best case 2026, and now again the informed forecasters are really looking at a balanced market, for this year, with the risk of going into deficit, by year end. So
BHP, what are they
exactly?
What are they next? Let's talk about this sort of the kind of broader market and the geopolitics driving this. Normally we start off with China, but we're going to start with the US.
Yeah.
So what's been happening over there?
Yeah. So again, I think one of the key themes here is the US and Western governments want to get China out of their supply chains, and as quickly and as much as they can. Again, places where China provides 90% of supply, that's not going to happen overnight. So, again, governments came up with all these programs. We're going to give all you guys a bunch of free capital to go build stuff because we'd like you to build that stuff.
Yeah.
Okay, well, you're still not doing that quickly enough, and we're a little nervous about China. So then, again, Biden announced a range of tariffs that were from anywhere from 25 to 100%, 100% on Chinese EVs, 25% on a bunch of critical materials.
Yeah.
And again, with the election coming up, some people are, are you nervous about the uncertainty? From what I was told, Trump's only complaint was that, I would have put them up even higher, So again, people need, the opportunity to invest in companies that have projects that are inside the wall, inside the fence.
Yeah.
Those fences, those walls, which turn into premium on products that are produced locally, is only going to continue to improve the overall economics. And again, none of that increased value is reflected in anybody's engineering study. I mean, those tariff announcements today for those materials for domestic producers just increased their profit margins significantly.
Yeah, I kind of miss the days of a global economy because at least things were cheap. Look, I as an investor, I'm not complaining because the commodity prices are going up, and it kind of seems like if you're invested in that space, good news. Nothing but good news.
Yes. Yeah.
Right.
Yeah.
So I shouldn't be smiling because my children will have to pay for it eventually. It kind of feels like if this geopolitical posturing and warring goes on. So I hope it does find some calm and some peace there. But if you're charging 10 to 100% tariffs, someone's, you may as well be telling them to F off. It's pretty aggressive stuff right now.
Oh yeah. Yep. And we'll see what China counters back with. So
that's the thing, because counter they will for sure. Right. So Americans getting a little bit aggressive, but Asia going on holiday.
Yeah. I mean, the first 2 weeks is, when they go on holiday, there's a week in October and week and then Chinese New Year. So, and those are the big holidays, so that, kind of, quieted things down for the last 2 weeks. But again, saw nickel sulfate prices go into batteries tick higher again. We're back into a small premium in the sulfate space. And, the other thing I've been pushing on is ore availability and the fact the Indonesians will manage ore supply. So no surprise, people are talking about just, how tight ore availability is, continuing to support. We saw nickel pig iron prices tick up, even though with that quiet, we saw stainless prices come off. So again, in terms of how this year is setting up, again, I'm not surprised that we got hit to 20,000 a little bit earlier than expected. But, we should see double-digit demand growth, and again, that's what, in terms of, where we see the next leg higher is by the end. So what's going to happen through the next 6 months? Every analyst report who said that the nickel was over and is never coming back 2 months ago, they can't admit that they were wrong that quickly.
Yeah.
So what you see, and one of the groups, CRU, picked up their monthly report, and it was like, nickel prices ahead of fundamentals. So you're going to see that for the next 6 months, and by the time we get to September, October, where we get double-digit demand growth. We'll see where Indonesian supply ends up settling out. But a lot of these guys have 3, 4, 5% nickel demand growth out through the end of the decade. And so all of a sudden, if it's really going to be 10, then deficits emerge, and big deficits emerge even with a pile of Indonesian supply coming to the market. So again, it won't be quite lithium in 2020 or 2021. But, we could see some fireworks.
It's kind of interesting at the moment because and I know we're talking the geopolitics at the moment, but I've kind of got to bring in similar kind of supply issue constraints because you've got people like Robert Freeland talking about copper. The issues of bringing that online. But it applies to all development projects at the moment, certainly in the battery space, right? It's the length of time these things get a need to get approvals to actually be built. And when they are built, it's the kind of rapid funding of it and the ramp up of it and there's not enough big projects out there of scale, right? So the economics may get sorted out by the constant driving of the metal prices, and at the right price, everything's economic, right? But you got to be allowed to kind of get there. So I think that's not just nickel; it's kind of copper. It's all these big development projects around the world, right?
Oh no, for sure. And I think one of the things that is a clear fundamental proof of that is. Right now, the U.S. trade-rated dollar, the U.S. dollar is strong against everything. Historically, if I was building an econometric model of metal prices, I would have industrial production in there, and I would have the U.S. trade-rated dollar because it's used to be highly negatively correlated to the strength in the U.S. dollar. And so, again, in copper, we're back up, out to prior highs and now setting new highs. But the last two times we set highs back in 2007-8 and 2010-11, the Aussie dollar was at par to the US dollar. The Canadian dollar was at par. So, it wasn't, so when it was 450 in US dollars, it was 450 in Canadian dollars. $5 copper price today is like 650, or higher on a Canadian pound. And it's just because we have, we really did not have, in response to the last set of prices moving higher, we didn't have a wave of supply come into the market. And so this is a signal to, hey, you traditional commodity producing countries, you need to start producing lots more supply because we need it. So
but that in itself is not enough. That in itself is not enough because a lot of the countries are big producers, and Chile's got a big kind of private sector too. But there's a lot of foreign direct investment in there, which is not getting the support and the funding that it likes. And obviously, with the equities generally being harmed as well, they're not kind of getting that liquidity support in the market either, right? So there's nothing of scale, so the big boys aren't investing in that. There's nothing advancing quickly enough, so retail perhaps a little bit nervous about their position too. So quite frankly, when I look at the metal sector and these kind of development plays, it makes me nervous about there's this huge demand wave which is coming over the hill, and we're going to be sitting here naked on the beach saying, well, where the hell did that come from? Do you know what I mean? And it's like the signals have been there, and it feels like the US government's just woken up, but maybe too late.
Oh no, I mean 100%. I mean, and part of the reason we've been aggressively advancing Crawford as quickly as we have, and again, sort of unlocking the regional potential that we have, is that very fact. Like when that wave comes, we want to be ready to get on the surfboard and and surf that share price way higher.
I know, but you've been doing the right thing. You've been positioning yourself, and it's been three tough markets. I have to say, but the scale thing has made it attractive to all the right people. The scale thing I'd make it very attractive to the North American market, and indeed in terms of that, homegrown-ish. North America, it's one country stuff. So I think that's it's good for you, but there's not too many people like you.
No,
that's when I say to investors, I look at a project like this because of the scale and the opportunity in front of you, also because the competition kind of sucks. Right?
Well, no. I mean, we need more projects advanced, and it's been a tough capital markets to get the market done. Now, the good thing is the U.S. Department of Defense put out a white paper that call for white paper. So that's the way they start the funding process. So there was a critical minerals white paper that was announced this week. So they're due by September. We'll be getting ours in, as quickly as possible. And again, I think you'll start to see a bunch more capital flow from the US DoD into some of these projects. So.
Well, we've better go on back to the geopolitics. We'll finish off with Indonesia and New Caledonia.
So again, the challenge with nickel is, Indonesia on its own is now more than, it's 55% of the market last year. That's more than OPEC was at its peak. And then you've got the Philippines and New Caledonia and Russia as 3 or 4 of your other bigger producers. New Caledonia is the 3rd largest. They made a change in terms of who could vote when, and basically there's been riots and almost near civil war, and the French government's going to have to look like they're going to send troops in to try and calm things down. So that's not going to lead to a lot of additional nickel supply coming from New Caledonia anytime soon,
or confidence from the markets. It will. Right.
So you got another source of supply out. And in Indonesia, a bunch of the news this week is that the mining association was saying, look at, we're going through our high grade material really quickly. It'd be nice if we kind of maybe look at managing more of that supply out to the market. The government kind of said, oh, don't worry, we think we've got enough. However, one data point that I've talked about a lot of times, Nickel Industries owns a couple of mines there. They went public 4 years ago, average grade over 2%, and within 3 years got down to 1.57. And, if they have a typical mine, that's the kind, again, when I went to those site visits last year, they're processing 1.5 to 1.6 in a lot of those operations. It's not 1.8.
So the decline rates are massive.
Yeah.
Wow.
So
I think we have talked about that, but every time we say it, it's shocking because that's quite a decline rate. Let's go to company news. We'll start with you guys. We'll put a link here to the conversation we just had in case you haven't missed it. But you are getting all the things on the ground.
Yeah. So since we last had our nickel talk, we had another set of excellent drill results from Reed. It's twice as wide as Crawford. It could be a multiple the size of Crawford. And then we took our...
and by that we mean is Crawford's 2nd largest
nickel reserve and resource in the world.
Right.
Yeah.
And this one's bigger.
Yeah.
Okay.
Yeah. So... and then with Man, so what we're doing with these projects is basically cutting and pasting our flow sheet and rolling it around to these other projects to see if it works right out of the box. And so we did that with Reed a year ago, and big thumbs up, worked great. And we've now done this with 2 samples from Man. Again, we started with better samples, just not to try and stress out, and we got great recovery numbers from it. So quite happy with that. And as the year goes on with the money from Agnico, and we're going to publish 7 resources by this time next year, we'll have done some initial mineralogy and met work on all of those by the time those come out next.
And I think the key thing there to remember is that it's not just you're happy, which every CEO should say they are, but Samsung's happy, Agnico Eagle's happy, and you've got Anglo happy. And this thing is moving towards FID with a good engineering firm who built
these kind
of projects for this thing is going to get financed. That's what we're saying to the world. Like I say, we'll put a link and you can watch the full interview on that one. Let's talk about Paranickel, one of my favorite CEOs in the sense of he's all out there.
Yeah.
It was a sort of nickel project. It's become a lot more.
Copper PGM project. Yeah, and honestly, some pretty sexy core. Like when you get multi-percent copper, and multi-gram PGMs. In Sudbury, there's what they call the footwall deposits, which are like that. They're kind of less than 1% nickel, lots of copper and lots of PGMs. So the key there is, I don't know the geology specifically, but generally when you see those kind of grades, what's happened is, there's just sort of a trap on the wall of a structure, and the higher grade stuff is pooled into that trap. And so, the question will be exactly how big is that one trap, and then again the same. Geological things don't tend to happen, in little scale. And so if there's a larger set of structures there, are there the potential for more of those pools to show up along there? So honestly, the stock's had a tremendous run.
Well, I think 3 times, right?
Yeah. So, but I think, it's good to see, and we'll continue to see if they can make it big enough and then replicate and get multiple ones of those going forward.
There's the challenge for him is going to get that kind of scale for him. Okay.
Some other ones, Nican. So this is a wine project. Again, this was a company, they had some higher grade holes in the past that were drilled. I'm not sure where this one sits relative to, but again, 45 meters, 1.2 copper, 1.3 nickel. Again, not sure, if it's a director's hole or not, but again, good to see that kind of grade width. We'll have to see sort of exactly what size that structure is that they're drilling. And they're getting some near surface stuff, which is also, good to see.
Okay. So have a look at them. Magna.
Yeah. And then the other high grade stuff, again, some great, these were basically, the 109 footwall deposit is the deposit. They're going to do a big bulk sample, which will actually generate some cash and ship it over to get processed in Sudbury. And again, seeing classic footwall grades, so again, sort of half to 1% nickel, multi-percent copper, in 10 to 30 gram, PGM grades. And again, a lot of these started, they were testing the up dip shallow at surface and got some great grades near surface. So it's good to see with those guys.
I kind of love this bulk sample selling stuff, because you kind of need lots of different ways to help companies survive, right? It's hard enough out there, guys.
Yeah.
Could the regulators or whoever is controlling this regionally or federally just not allow more companies to do this? Because some can. I think it's good news.
In Ontario, actually, I mean, one of the things that Mines Minister George Perry did, the ministry, one of the first things he did in terms of building mines faster is actually simplify the permitting around bulk samples. So, so
it's common sense.
Yeah.
Right?
Yeah. So,
okay. Premium nickel.
Yeah. The other ones that's sort of getting some good high grade stuff. Another 6 holes. Again, they're continuing to drill out the resource. This one again is tend to be a little more copper at times, but it was good. They got a nice hole, 17 meters, that 2% nickel, another 2% copper and cobalt. So good to see. Again, the challenge with any high grade deposit is just checking to see exactly sort of how big it's going to be and what grade you end up with a mineable width. But they've been getting some pretty decent results there. So we'll see how that goes.
Nice to see some of these companies actually starting to deliver on the grades.
Yep.
Fantastic. Well, Mark, you got to go. I got to go.
Yep.
Thanks for
Good to
coming
see you,
in.
sir.
Cheers.